Hey guys, Bix Weir, Roota.com with your third update from the two timeline videos. If you guys want to see the first four, go to the Roto website, and it is right in the private road area. It's the second um, link right there, special report, Roota's timeline. And click on that and then go through those first four. I just went through them again. I'm like, oh yeah, oh yeah, oh yeah. So really important stuff. Today's is an update, kind of where we are economically. Are we? Remember, the banks are weaker than they were back in 2008, before the real crisis hit. Probably, if you look at like June, July, you're kind of hearing strange things. June, July of 2008, you're trying to kind of hearing strange things. That's like everything's fine. The government kept saying everything's fine, and then you'd have little bombs going off and drops in the stock market and things like that until September 11th, 2008, when the computers clashed. I think we're headed for the exact same thing. Question is, will we see anything on September 11th? Because we didn't see anything last September 11th until later. And the real crash started kicking in about late September. But Senator Kanjorski clearly said it was September 11th at 11 a.m. So I think out of all the days going forward on September 11th, 2019 is probably the most likely, because of the four things I said, or the four videos I put out, and it will be 11 years from the last time they tried to end the old system. And I think this time it's going to be big enough, because Deutsche Bank is clearly not getting better. I'll talk about that in a second. Nor is the economy getting better, and Trump is doing everything he can to destroy the economy, much like Greenspan did. The way Trump is doing it, let's dive right in, is the tariff wars, and fighting with China, our largest supplier of goods. And here's an article on Zero Hedge. Futures plunge after China announces retaliatory tariffs. We saw this with the Smoot-Hawley Act back in the 1930s, which everybody, to the man, economist-wise, says it's the worst thing you can do is get into a trade war, especially when things are so weak. And yes, they are weak. The economic recovery is all smoke and mirrors put forward by the Exchange Stabilization Fund, who's buying stocks, who's suppressing gold and silver, who's suppressing cryptos. Really interesting times. So they're faking all the numbers. They're massive rigging with unlimited funds. That's the thing you got to remember, is unlimited funds when you're talking about the U.S. government interventions. Unlimited, as in there are no limits to the amount of stocks, bonds, whatever they want to buy with fiat money that they don't even create anymore. They just put their buy orders in. They don't need money to back it up because they print the money. And they don't have to tell anybody that they're printing the money. They don't even print the money. The difference between $100 billion and $1 trillion is one electronic zero. And that's the thing you guys got to get your head around, is that's what Roota wrote in the sand. Print money to infinity. We are at infinity money. There is no restraints behind the scenes. And they don't have to tell anybody about it, and U.S. hasn't for years. The Catherine Austin Fitts is just scraping the surface. There is no limit. There are no laws on how much money that can be created out of thin air. China's doing the same thing. Russia, everybody. Nobody trusts each other, and remember, trust. The monetary system is held together by trust, which is scary. Anyway, just over an hour after the Global Times, Hu Xing warned that China would announce retaliatory tariffs on a certain U.S. products, adding that China has ammunition to fight back. That's precisely what happened when China's Ministry of Finance said in a statement posted on its website late Friday that it would levy retaliatory tariffs on another $75 billion in U.S. goods, with rates anywhere between 5 and 10%. With the tariffs set to be implemented in two batches, one at midnight on September 1st and another at midnight on December 5th. Additionally, China said it would resume 25% tariffs on U.S. autos, stating that China's adoption of tariff-adding measures is a forced move to deal with U.S. unilateralism and trade protection. which is something ironic because of the time zone difference quirk. It will, in fact, be China who will impose tariffs on the U.S. first at midnight, Beijing time, 12 hours before the U.S. imposes its own tariffs on China. You knew it was coming. Trump knows what he's doing. He's trying to destroy the system. If you really want things to go smooth, yeah, keep doing what Obama did, what the Bushes did, give everything to China. He doesn't want it, nor does anybody. I mean, this is the one of the linchpins. This will destroy derivatives, and that's the key. The derivative situation is beyond bad. Another article from the Economic Collapse blog. One of the largest too big to fail banks in America boldly declares that the wheels for a slowdown are in motion. Boldly declares that, yeah. Now one of the biggest banks in the entire country is openly admitting that a slowdown is upon us. Over the past week or so, the mainstream media has been filled with chatter about the possibility of a recession and what would it mean for the Trump campaign in 2020. So the Democrats want to do this. The bad guys want to do this. Everybody wants the system to implode. Little do they know, Trump wants it to implode too. Good guys, bad guys, everybody wants the system to implode. They're going to get it. It's not that all Trump has to say to Mnuchin is, all right, take your finger off the mouse. Boom. When they stop the support of the system falls apart. And that's where we're headed. Very exciting times. And this was Morgan Stanley, basically Bank of America. The downtrend in some global economies is becoming contagious as weakness in the manufacturing sector begins to spread, according to Morgan Stanley, which warned clients that the wheels for a slowdown are in motion. Even as we have been revising our growth projections lower, we continue to highlight that the risks remain decidedly skewed to the downside. We will enter into a global recession. The system can't handle a recession. It is so weak and artificially supported. Any hiccup would destroy everything with the derivatives. So let's look at the linchpin of derivatives. Deutsche Bank. 50 trillion in derivatives that are going sideways. Let's see what's going on. They better hope for good news, right? They've never been weaker, and let's look at the news these days. Deutsche Bank's historic revamp hit by a sagging German economy. 1 month into Deutsche Bank's boldest restructuring effort yet, the world has turned against Chief Executive Officer Christian Soing, or at least Germany has. Fears of an economic recession and the specter of even lower interest rates have taken a toll on banks across Europe. But for Soing, who just pinned his bank's future on closer ties with Germany, export-oriented companies, and a pivot away from Wall Street investment banking, the rapid deterioration comes at a particularly bad time. Shares of the Frankfurt-based lender fell to record low this week as reports showed Germany is teetering on the edge of recession. Manufacturers are reeling from the trade war between the U.S. and China, with big exporters such as Daimler AG, which is Chrysler, BASF, Continental AG, Henkel AG, cutting forecasts. Should their woes get worse, they could complicate a revamp that has little room for error after a series of costly and unsuccessful turnaround efforts by Soing's predecessors. Falling hope grows. Look at that. Deutsche Bank restructuring plan has been ambitious from the start, and Germany's economic slowdown will make it that much harder to achieve. Basically, they are screwed, and what do you do when a too big to fail is screwed? U.S. fines Deutsche Bank $16 million to settle China-Russia corruption charges. Deutsche Bank has agreed to pay more than $16 million to settle charges that it violated U.S. corporation laws by hiring relatives of foreign government officials in order to win or retain business. So they keep pounding them and pounding them and pounding them, knowing that they have $50 trillion in derivatives. It is an amazing time right now. And next, Deutsche Bank hits back at U.S. think tank over capital buffers. Deutsche Bank on Thursday hit back at a Washington think tank that had criticized the German lender for letting its capital buffer shrink to help pay for its restructuring. You can't have strong capital buffers if you're losing money, bleeding money. And that's how they're hiding some of their debt, is they're destroying their own capital. Of course it's true, but Deutsche Bank say, no. Listen to what Deutsche Bank says. Chief Financial Officer James Multeek, in a letter posted on Deutsche Bank's website, said in an opinion piece by Better Markets co-founder Dennis Keller and his colleague Joseph Shawinski in the American Banker was a, quote, gross misinterpretation of the lender's restructuring plan. In Deutsche Bank's piece, in the Better Markets piece, Keller and Chawinski argued that, quote, reducing capital to increase short-term returns for shareholders is grossly irresponsible. They argued that the move jeopardizes the resilience of the lender at a time when it struggles with high funding costs and headwinds from lower interest rates and could ultimately leave U.S. taxpayers on the hook. All taxpayers, the global economic system on the hook. I don't know what they're talking about. And then Deutsche Bank says the interpretation was groundless, pointing out that the bank was using its existing resources to fix long-term challenges at the expense of short-term returns. The reduction in a key measure of capital strength will leave the bank well above regulatory requirements. Regulatory requirements don't take into account the destruction of the derivative. Not at all. And they said our capital and liquidity ratios and the levels of risk that we are running among the other prudent are the most prudent in the industry. How can they say the levels of risk they are running are the most prudent in the industry when they have $50 trillion in derivatives? He should be sued for that. And so how's their restructuring going? Humbled, Deutsche Bank faces battle in its own backyard. On-time retailer Zalando is just the kind of fast-growing German business with foreign expansion plans that Deutsche Bank chief executive Sohing needs to help drive the struggling lender's recovery. In an attempt to draw a line under years of scandals and heavy losses, Sohing is pulling back from investment banking and rebuilding Deutsche Bank's corporate division in deepening existing relationships and attracting clients beyond its traditional blue-chip customers. But when Deutsche Bank has tried to expand its business with Zalando by offering to hold more of its cash for free rather than charging a fee, Zalando has declined. The company, whose revenue has grown to 50 billion euros in the 11 years since it was founded, wants to continue to spread its risk by leaving its cash and with a wide range of institutions, sometimes for a fee. This is it. This is what their big recovery plan, one of the biggest retailers in Germany. Quote, Deutsche Bank is a systemically relevant bank, but nevertheless, we see a possible risk and are trying to do the best of our knowledge to the best of our knowledge to mitigate the risk and have a good night's sleep. They can't even get their own companies, their own German companies, to bank with them just to hold cash. That's crazy. So yes, Deutsche Bank is not long for this world. And it could easily go the way of the Lehman. It's actually right on track. So, yeah, and where does that point to? Right around September 2019. Hang on to your hats, my friends. And then finally, I did want to discuss Patrick Byrne, what's going on with Patrick Byrne. This is the CEO of Overstock.com, a guy who's fought the bankers for a long time. Amazing series called Deep Capture back in the .com days, showed how the bankers went after him. He has spoken out against the deep state. Peter Strzok actually contacted him. He was working with the DOJ, and they were using him. He has turned state's evidence against it. He said, this is getting crazy. He is worried for his life. And so he stepped down as the CEO of Overstock. I saw an interview on Fox News, one of the Fox stations, where they had like 5 of their business experts. These people are, it just blindingly shows how completely corrupt and the stupidity of business in America and the traditional stock investors, that they're saying, well, you, how dare you shirk your fiduciary responsibility for your company by jeopardizing them by turning state's evidence. You should have thought about the shareholders before you thought about getting involved with the deep state. Are you kidding me? Patrick Byrne is a true American. He went to Warren Buffett, his mentor, and said, "What do I do?" Buffett said, "Turn the mother f's in." Absolutely. And then Fox Business News, these idiots on there, all they care about is in their little world of stocks and bonds. And how dare you jeopardize the Overstock name by turning state's evidence? These people, I can't believe they're paid, first of all, to opine on their expertise of what's going on in the economy and the stock market. I was just appalled, and Byrne flat out said, "Who the hell are you?" I'm an American doing my patriotic duty. My duty as a patriot, as a citizen of the United States, comes far above making money or worrying about my company, shirking the fiduciary responsibilities of my company. There would be no company called Overstock.com without the soundness of the United States. So, yes, country over business. I'm sorry, but these freaking idiots on the news who talk about they talk about they think the stocks are so much more important. Stocks and bonds are so much more important than your country, than treason. I was shocked that he was livid. And he's a good guy, amazing guy. And yes, Peter Strzok had contact. He didn't know who it was, but it was Peter Strzok, and they tried to set him up too. I'm scared that Patrick might get taken out. Supposedly he's already turned over everything to William Barr. Once William Barr got in, he said, "Yeah, okay, I can trust this guy." Sessions, no, can't trust that. So bravo to Patrick Byrne. I wish him and his family the best of luck fighting the deep state criminals. If I were him, I would hire a lot of security and lay low. Maybe even get into witness protection, because these people are bad news. Anyway, that's it for today. This is an update. As we get closer, I promised I'd do more and more updates on kind of where we are for the private road members. And that's where we are. So I will post this to as the third update on the timeline articles. Make sure you go listen to those first four. Again, September 11th is the D-Day that I think it's the most likely day between now and the next 5 years. It doesn't mean we're going to see it that day. I think September, October will be the times of chaos. And I hope for the best, but I highly advise get all your cryptos off the exchanges. Absolutely. Get your gold and silver out of the way of the bankers. Nobody should be holding your gold and silver. Obviously, no stocks, no bonds. And hunker down. It's going to get chaotic. I think there is a plan in place, since they've had 100 years to plan for it in the United States. But even the best laid plans are not going to fare well on this crazy transition. That's all I got for you. BigSquareRoadRoota.com. Talk to you later.